How do you build business credit quickly? How do you do this fast? Well, that's exactly what we're going to be talking about today. Today, we're going to talk about how to start building initial business credit quickly. Next month, on the 15th of June, we have a really powerful presentation on everything you need to do to set up your initial credit profile and score, including a look into vendors. But today, we're going to take an overview of the business credit building process, the important things you need to know in each step to be able to go through this process and build business credit, but do it fast. This isn't just a how-to guide on how to build business credit. This is the stuff we've learned through helping 50,000 people through this process on how to actually do it quickly. So we've got a lot to cover. Let's dive in. Remember, when we talk about business credit, we're talking about building a credit profile for the business. The credit profile for the business can then be used to qualify for all kinds of funding. I like to describe business credit as a way for a business to fund itself, because even if you don't have cash flow, credit collateral, all the other things, excuse me, that are needed to qualify for loans or credit lines, you could still get business credit, and you could still use it to qualify, make it easier to qualify for other kinds of financing. And you can use it and it alone to qualify for all types of revolving credit. So business credit, we're building your credit profile for the business that's separate than yours. And then what we're doing is we're not using yours. We're using the business credit profile we established to start qualifying for all kinds of funding. It basically helps your business stand on its own. So, of course, whenever I talk about business credit building, I always have to start with the most important step of getting money at all, which has to do with fundability. This is your reputation. It's how lenders and credit issuers perceive your business. And here's why it's essential when it comes to building business credit. It's essential because when you don't have a credit profile for your business, when you don't have a credit score for your business, you lack a lot of credibility that lenders and credit issuers want to see. So you get this. Think about this as a consumer. If you have no credit profile, no credit score as a consumer, it's impossible to get a mortgage. It's nearly impossible to get a car loan, and really tough to get most credit cards or other kind of loans you're going to get. So that's exactly the same thing in the business world. If you don't have a credit profile or score, you're already fighting an uphill battle to be able to get even initial vendor credit to start building business credit. So in this scenario, what you've got to do is rely on the reputation of your company. You got to build your credibility so strong with lenders and credit issuers that when they look at the business structure you have, they say, wow, this person deserves to get initial credit. Then you use that strong foundation to build the credit profile and score. Then use the strong foundation and establishment of the business the right way with the credit profile and score. And those two are a powerful force to help you qualify for all types of financing and business credit as well. So when we talk about fundability, this is a word that we use and lenders, credit issuers rely on to basically talk about the ability of your business to get money, period. That's what it comes down to. It's somebody looks at your business and says, should you be given money or not? That really has to do with the overall fundability of your business. So when we talk about building business credit quickly, again, the best way to avoid delays is to get automated approvals. So when we talk about building credit, we think about two outcomes. I apply for a credit card and I get the, hey, congratulations, you're approved, your limit's $10,000 message, right? Or whatever it may be. Then we get that dreaded message that we'll hear by mail in 7 to 10 days. Clear difference. The difference is that on one hand, the computers from the credit issuer have automatically approved us. It's like check marks, boom, boom, boom. We meet all the criteria and bam, here's an approval and here's the amount we get approved for. And I'll even talk to you about how to get the amount you're approved for higher during today's training. Then on the other end, we get that dreaded message we'll hear by 7 days. Why is that? What's happening in that message? What the message tells us is that the computer did not give us an approval. It flagged it for needing a manual review. It will go to an underwriter to manually review that application. And as you know, and I know, in almost all cases, that letter we get in the mail says we're denied and why we're denied. It's usually not an approval. Very rarely does something get pushed to a manual review and the underwriter ever approve it. The underwriters may be they're really there to look and see the computer didn't trip up. Okay, but if the findings of the computer, all these X's instead of checks, I'm trying to make X's, I'm not doing a very good job, these X's instead of checks, then the manual underwriter typically agrees and denies the file, and you hear by mail that you're denied. So if we want to do this quick, we got to get automated approvals. We got to figure out what's causing the denials, get rid of those reasons so we just start spitting out automated approvals. Because when we can help condense the time from years to months of business credit building, the number one way we found to do it is by only teeing up accounts that people can actually get approved for, and not giving them access to accounts or not exposing them to accounts that they're not going to get approved for. Bottom line is if you want to build your business credit quickly, you've got to focus on what's needed to get approvals and not get denials. And fundability is where 80% of denials happen. So when we talk about your business name, what we're talking about here is knowing what industry you're in, okay, and making sure that your name of your business doesn't reflect you're in a high-risk industry. Credit Suite's a perfect example of what not to do. Credit's in our name. It's harder for us to get credit cards, loans. A lot of our stuff gets flagged because credit's in our name, right? So this is the thing. If you don't want to be high risk, then you don't want your name to reflect you're in a high-risk industry. So over-the-road trucking is high risk because there's a lot of risk of injury on the job. So if you put trucking in your actual name, well, then it's going to trigger a red flag. If you put credit in your name indicating you're in financial services, it's going to trigger a red flag. If you're a pawn shop and you put, Chico's Pawn or Chico's Bail Bonds, it's going to indicate you're in a high-risk industry. So you probably want to go with a name that doesn't indicate you're in a high-risk industry. You might be in a high-risk industry, but again, choosing a name that doesn't indicate that will at least not get you an X versus a check in this section. Lenders will sign off, or the credit computers will sign off if the name looks to be like it's not a high-risk industry, and it'll be put X and a red flag there if it seems like it is in an industry, okay? So you also need to make sure your name is listed the same everywhere. This is the biggest reason that loans and credit cards get denied, is because when lenders go to verify your application to make sure your business is real, they go to Secretary of State and the information doesn't match. I talk about this all the time. It's a very common problem we experience, and it's a common problem we experience because typically the order most business owners take is we go set up the entity first in the state, then we get our address, then we get our phone number, and we never even think about going back and updating the information. You got to make sure the information is congruent, the name is correctly spelled everywhere that the name of the business is actually spelled, okay? And again, it's not bad to copy and paste so you don't make this mistake by typing it in manually every time, as long as you're copying, pasting the right information, right? So as long as your business name is set up the right way, doesn't indicate you're in a high-risk industry, that goes a long way. The second thing is you've got to know your NAICS code. Again, something I talk about quite frequently because it is very important. And here's what I mean by that. The NAICS code goes deeper than any of us really are paying attention to. And Erica says, is Omnitech Logistics risky? No, it's not at all. Logistics is in a high-risk industry, so that's a great name. I love that, Eric, and thanks for sharing that with us. So you got to know your industry. Okay, and I talk about this frequently, and I'll tell you why, because this goes way deeper than you ever may think it goes. The industry classification system was designed by the government really to figure out what industry you're in and compare you to other people in your industry. So, for example, the IRS uses this to look at your expenses and compare it to other expenses in your same industry to see if an audit is warranted. That's what throws off red flags. So if I'm in accounting, right, and I'm claiming, that's probably a bad example. Okay, so let's say that I'm in trucking, over-the-road trucking, and I have expenses, and then what IRS does is they look at other over-the-road truckers and their expenses. If mine are way out of line with the rest of my industry, it triggers red flags, and that's what triggers audits. So I'm not an accountant, and I'm not an attorney, and this isn't legal or accounting advice, but that is how the system works. The SEC uses this amongst many others. But lenders and credit issuers use it to determine, are you in a high-risk industry where you should get denied, face greater underwriter scrutiny, pay more in interest, get a shorter term, all nasty stuff we don't want, or are you in a low-risk industry where none of that stuff applies? The credit bureaus use this for what's called comparison scores, and comparison scores are basically where they compare us to other people in our industry. That happens too, and this happens a lot because lenders and credit issuers might already know our industry is high risk, but they want to see how we perform within the high-risk industry. So I might be in a high-risk industry, but be in the top 1% of my industry, which means, yeah, my industry might be high risk of defaulting on loans, but not me. If you compare me to others in my industry, I'm about as low a risk in my industry as I can get. This is fantastic for you. If you are seen as being in a high-risk industry, this means you can actually be the lowest risk in that high-risk industry. But here's the thing. It's better to avoid being in a high-risk industry altogether. But you can only do that if you know what your industry is and you're putting on your application exactly what your industry code is and exactly what your industry name is. So I'm at NAICS.com, super simple. Find your NAICS code, right here to the right. You can see all the different sections that you might be in, and then you can always drill it down to the subsections to figure out exactly where you are. I use real estate because it's a perfect example. You might say you're in real estate, but as you can see here, there's 32 subcategories of real estate, 32, right? So you can't just say you're in real estate, because when you do that, lenders and credit issuers are going to choose which one of the 32 you are. And the problem there is they'll always default and choose high risk because it's better for them. I mean, think about it. If lenders are trying to prevent, their downside. So if they see an application that could be high or low risk, they always go to high risk because that protects them and they have less exposure than if they chose to put you in low risk. So whenever there's a question, they'll always choose high risk. That's why you're better to say, hey, what industry are you in? I am in the residential property management business, NAICS 531311. Yeah, it's how every application for credit financing should be filled out. So you avoid any questions of what industry you're in. The other thing you want to think about here is you want to think about choosing an industry that's not high risk versus one that is. So Credit Suite, I use this example often. We can be several things if you think about it. First of all, we sell software. Everybody that enrolls with us buys our business finance suite. And here's our technology, for example, and they use this to come in and they use it to build business credit, get financing, improve the fundability. So we could be a software company. Everything we sell is software. But we could also be financial services because we work with credit or financing. We could also be consulting because we consult and help a lot of people along the line of business credit financing. We could also be education. I think we all agree we provide a ton of education in the space of business credit financing. So see, we can choose which of these we're in. We can't choose wrong. It's not like we say we're education and somebody else goes, no, you're this. We decide what we are. And if anybody questions, there's no question. They say, well, how are you an education company? I say, well, let me show you. I'll go to youtube.com/credit suite. Here you go. There's 500 videos with educational content. How can you say we're not education, right? So you choose. If there's industries that could be one or the other, then you can choose the lower risk and therefore have a lower risk NAICS code. And that goes a long way to be able to get you approved as well. You should look at your SIC code, although it's an older system, but you should also know your NAICS code. Now, along the line of building business quick, you want to make sure you choose the right entity type. And Niles, this is great information. Thank you very much. Guys, if you're getting value, hit the like button, hit the love button. That's all I ask. If you're getting value, if this helps you, if you came in and got something you didn't know when you came in, then hit the like button, hit the love button. It's simple to you just by hitting that button. But for me, it's a big deal because it tells Facebook, it tells YouTube, hey, this information is valuable. And what they do is they show it to more people. And my goal is to help as many entrepreneurs as I can. So you help me and a lot of people just by hitting that like and share and love button. It seems such a simple thing, but it has massive benefits on the backside. So please do that. Okay. And Quan says, is real estate high risk? Yes, it is, because real estate is considered to be financial services, accounting, lawyers, real estate agents, mortgage brokers, title companies. We're all high risk, because we're all considered to be financial services. And Sacred Space says, is there a list that categorizes which industry are low to high risk? It changes all the time. Now, if you go to youtube.com/credit suite, you'll see we've done training that go through the actual industries themselves, show which industries are high risk and which ones aren't. But that information changes all the time. So that's one of the best resources to do that. So best entities, corporation, period, hands down. You can choose an LLC too, although the IRS doesn't officially recognize an LLC as an entity type. You are better to actually go with a corporation or a front-facing LLC. Those are the best. You want to avoid a sole proprietorship. Do not do this. Even SBA says that a sole proprietorship is for a business owner that's experimenting with a business idea. But once you have a real business, you have to get away from a sole proprietorship. That's the SBA. So it just goes to show you how lenders, credit issuers, SBA, Score, Inc., it doesn't matter who you look at. They don't look at sole props as real entities. They just don't. It's an experimental thing. You don't have a real business when you're a sole prop. You got to get away from it if you are. You need to get away from it immediately. You want to choose a corporation. You also can go with an LLC. You need to get an EIN number. Yeah, you can't have a business without an EIN. But you got to think about it. Credit is built for your social security number. Business or corporate credit is built to your EIN. If you don't have an EIN, you can't build business credit. You just can't. So save yourself time and make sure that you get an EIN number. Make sure you have a business address. Huge discussion on yesterday's training about this, because what happens is a lot of people are going to places like iPostal, getting addresses that are not virtual addresses. They're just mailboxes like UPS, and it gets them denied again and again. And yesterday was talking about all these denials, all these problems people were having from using these type of mailboxes. So you got to be very careful. When it comes to addresses, the number one type of address you want to have is you want to make sure that you have a real physical location, like a store people can go to. It's the best type of address you can have. But if you don't need a retail location, then the second best type of email or address you can have is a virtual address. And you can go to creditsuite.com/virtual to be able to access our source. You can go to youtube.com/creditsuite to actually and search virtual address with tons of training we have on virtual addresses as well. But here's the clear difference. A virtual address is a regular commercial building. It houses real offices, and the company that will rent you the mailbox or the mail address there has real offices in that location. They own that. That is theirs. They rent it. They lease it. They own it. Okay. And they then lease that office space just like anybody leases real office space. But instead of just renting real office space, they also offer access to real mail address there. So you're renting a real mail address in a real office space. The difference is a UPS address is not a real office space. It's a mailbox. iPostal is a mailbox. The PO boxes from the USPS are mailboxes as well. So these are all mailboxes. And the problem is in the 80s, the government said, we got to figure out these different address types. So they developed a system and technology that could tell them what kind of address you actually have. Lenders, credit issuers, even we, Credit Suite, use exactly the same technology to determine the address somebody has. When you enter an address in our system within milliseconds or whatever's faster than milliseconds, our computer knows what kind of address it is because it's the same tech. Everybody uses the same tech to determine it. And here's the address types. It could be a home address, it could be a commercial address, or it could be a actual mailbox address. So in order to create the system in the 80s, the government had to put PO boxes, UPS addresses, iPostal type boxes. They put it into this big bucket so everybody could tell, oh, that's a mailbox versus a real commercial address. So you might think that because you have a regular UPS address that it's a real address, but it's not seen that way. Everybody knows it's a mailbox address. And this will get you denied for a DUNS number. It'll get you denied for bank accounts, for merchant accounts, for credit cards, loans, credit lines. It gets you denied all over the place. They do not like mailboxes whatsoever. They actually prefer home addresses versus mailboxes. So you want to get a virtual address. You want to be able to go to a place that actually rents real office space that will rent you an address that anywhere that you put it online, DUNS number, application for credit, application for anything, it looks and is seen as a commercial address, not seen as a mailbox. Now, I oftentimes hear people say, hey, I got denied for a DUNS number because I used a virtual address. Hey, I got denied for a merchant account. I got denied for a bank account because I used a real physical address or I used a virtual address. This came up yesterday in its training. Somebody said, hey, my bank account made me put my real physical address on there, which is my home, because they said they didn't accept virtual addresses. I said, that's not cool. That's not the true at all. It's not the case. They can't tell you that a virtual address isn't a real commercial address. Their computers don't know the difference. So what that tells me is that you used a mail address, not a virtual address. Did you use iPostal? And you know what she said? Yeah, I did. I used iPostal. I said, that's not a virtual address. It's a mail address. So all kinds of problems happen. You got to choose a virtual address, Alliance, DaVinci, and Regus. That's it. Alliance, DaVinci, and Regus. If you use any other kind of virtual address, it's probably a mailbox, not a real virtual address, unless they can show you they have real physical retail offices they rent. So DaVinci, Alliance, and Regus. Now, along this line, you want to know the order of addresses, and here they are. Real retail location if you need one and can get one. Virtual address is choice 2. Home address is choice 3. There is no choice 4. 4 doesn't exist. You need to choose in this order, preferably retail location, virtual address if not, home address last resort. You never want to do PO boxes or UPS addresses. It's a one-way ticket to denials, and one-way ticket to denials means we slow down the business credit building process. We also need to make sure we get a business phone number. It can be voice over IP. We want to avoid Google Voice. Don't know why. I just see a lot of people getting denied for business credit because they're using a Google Voice number. We haven't figured out why that is. We may never know, but I do know to avoid them. Get a voice over IP address instead, or a regular business landline. Stay away from mobile home or home phone. Same thing. We have the tech. Everybody has the tech to clearly say this is a home phone, this is a mobile phone, this is a voice over IP, it's a landline for a business. They know. So you want to make sure you get an actual business phone number, even if it's a voice over IP. It needs to be toll free and needs to be listed with 411. A lot of vendors that you initially start building business credit with want you to actually have an actual 411 listing. And here, I'll show you what I'm talking about. So let's say we go to Uline here to start building business credit. When we look at what's required to get approved with Uline, you understand why I'm teaching you what I'm teaching you. So in order to get Uline, you need an entity in good standing. Check, I covered that. You need an EIN number. Check, I covered that. Your business address, and it needs to match everywhere. Check, we covered that. We're going to cover DMB number in a minute. Okay, we're going to cover license in a minute, bank account, but we also see business phone number listed with 411. Again, when credit issuers don't have a credit report for your business yet, they rely on what you put on the application more than anything else for your credibility. They want to see that phone number is listed with 411 as a sign of credibility. So if you've done this, then that goes a long way to helping you get approved and get approved for initial business credit and those initial vendors. Now, as I mentioned, licensing isn't needed, but it helps you. I'll talk to you about a vendor later that will give you a $2,500 credit line just because you have a business license. A business that has a license looks more credible one that doesn't. Now, in Florida, it's super simple. We call this an occupational license here in Florida. I think we changed the name of it. So let me see. Business license, and this is how you find out if you can get one. Business license, Pasco County, Florida. Now, what's going to pull up here, formerly known as an occupational license. Okay, here we go. It's a business operating in Pasco County. And here we go. I can come in and get business tax receipts, formerly known. Okay, so business tax receipts is what we call them. And right here, I easily found it with my Secretary of State. I can easily apply for a new one. Here's my application. Proceed to site. Yep, I'm going to proceed and go to Pasco County Taxes, and I'm going to get this thing, and I'm going to apply for a new account, and let's see if it tells me how much money it is. I don't know. It started asking me questions. You see what I'm saying? Super simple. Now, if you can get a license in your industry, in your state, in your county, get one. But you see how super simple it was for me just to come in and do a really basic search here, a business license, my county, and immediately find a license I can get. Having that license gives me a lot more credibility than if I don't have an actual license. Okay, so that's a little tip that can help you along the way. Now, Elaine says, what if you had a DUNS number and an EIN number for over 10 years? Then great. That goes a long time. The EIN and DUNS number and how long you've had them don't matter. What matters is how long the business has been open. The longer a business has been open, the more credibility it will give you. So that's fantastic, Elaine. Engineered Appliance Repair says, do these virtual offices provide lease agreements? I've run into issues where they had asked for lease agreements. You can't fake that. Usually that's not for business credit. That's for loans. Sometimes for a loan like SBA, they want an actual lease agreement. And in that case, there's nothing you could do. You don't have a lease agreement unless you have a real lease. So they're not going to provide you a lease unless you rented an actual physical office from them, and then they would. So like if I go to Alliance, for example, Alliance virtual addresses, they have a lot of different products and services that I could actually get, okay? They have a lot of things that could actually help me. So I could get a real office location. I could get an office. I could rent an office from them. I could just get my mail there. I could just use their conference rooms. I mean, I could go through 10, 15, 20 different services they offer. You choose the level of servicing you want. So you could get an office at Alliance, Regis Da Vinci, pay for that and get a lease agreement, but they're not going to give you a lease agreement unless you actually have space. Really good question, by the way, Engineered Appliance Repair. And I like that your name is Engineered Appliance Repair because I'm going to say it 100 times. It's like free advertising, Engineered Appliance Repair. So that's a great naming your channel that because then you get free advertising. So great question. And to answer it, you can't get one unless you're actually really leasing a space, which you can actually do from them. Okay, so business licenses, again, get it if you can. It goes a long way. Set up your business website. It should reflect what you do, products, services. It should even have pricing on there. Get a professional email address that's the same as your domain. My domain, creditsuite.com. My email is info@creditsuite.com. It's the same. Your company name should be your domain name, should be your company as well. If you've done these things, then you've done a lot towards your fundability. bank account, set it up. You don't need it for business credit building, but these applications are going to ask for bank references, and you're not going to have a bank reference unless you have a business bank account set up. Plus, sometimes lenders and credit issuers look at the date you started your bank account as when your business started, especially if there's a change in ownership. This is why you never want to buy a shelf corporation, because the minute an ownership changes, so you buy a shelf corporation from me, which I don't sell them, I never would because I think they're a scam. But let's say you were to buy one from me, then I have to change the ownership to you. The minute that happens, red flags are thrown up on business credit reports, and the credit report says that a change of ownership occurred on this date. When lenders and credit issuers see that change of ownership, they default and look at bank account start date as your actual start date of your business. Some other things to keep in mind. You have secret credit scores lenders and credit issuers are using that you might not even know about that are looking at your bank account. One is called a bank rating. It's a credit score that is used by banks for businesses to determine if you can even get money from the bank or not. You can't even get a credit card, a loan, or a credit line from a big bank unless you have a bank rating score high enough to qualify. Check Systems is credit report and score that is just for how you manage your bank accounts. Okay, and that will actually be used by lenders and credit issuers as well. So all of these take into account how long you've had your bank account open for. So open that bank account as soon as you open the entity, as soon as you can. Not only does it open up a bunch of funding opportunities, but it goes a long way to credibility as well. Get a DUNS number with Dun & Bradstreet. You can get it at creditsuite.com/DUNS, D-U-N-S. You can search online free DUNS number as well. 10 minutes. 10 minutes to fill out the application for the DUNS number. Have your website, your email, your address, your business phone number, your entity, your EIN, all that needs to be set up first. They will call you and try to sell you their credit builder program. You don't need it. I wouldn't buy it. Even if you build credit with Dun & Bradstreet, you still have to follow my advice to build credit with the Experian and Equifax. So you still got to do what we're talking about today, whether you buy their credit builder or not. So you might as well just skip that and save yourself $1,500. If you don't want to get sold by Dun & Bradstreet, never get them on the phone. You get them on the phone, they're going to sell you something. Let me give you a tip. Dun & Bradstreet's never going to call you. They're never going to ask that you call them. Anytime that ever happens, you're not dealing with Dun & Bradstreet. You're dealing with Dun & Bradstreet credibility, and their entire role is to sell credit monitoring. That's what they do. So if you don't want to be sold something you don't need, don't get on the phone with them. You can get your DUNS number for free, activate your credit profile. I'll show you how to do that here in a few minutes, so you don't need to pay them that $1,500. So keep in mind, in order to get loans and credit lines, you've got to have cash flow credit or collateral, one of those three things, all three if you want SBA loans. One of the nice things about business credit is you don't need any of these three. You can get it as a startup. You don't need cash flow. It's unsecured credit. You don't need collateral, and you don't need good personal credit. What I'm going to show you today will get you everything I'm going to show you with no credit check. So it's one of the best ways to get funding because you don't need any of the things that are required to get normal kinds of financing, like loans and credit lines. I shouldn't say normal kind of financing. I should say the other kind of financing, loans and credit lines. Now, we're going to start building business credit with vendor accounts. Vendor accounts offer terms like net 30, net 15, net 60. And those examples, that would mean I have 30 days, 15 days, or 60 days to pay back the credit in its entirety. If you're not used to net terms, think of it like this. When you start building consumer credit, you get secure credit cards, which still are laughable to me. You go to a lender, you give them your money, they give you a credit card to access your money and you pay interest on it, right? But that's how you start building consumer credit. Then we get into what are called revolving credit cards, where I could put $1,000 on it and pay a minimum payment of $25, right? So vendor credit is like in between those two. It's not secure. You don't have to give them money down like you do a secure credit card. But what you do is you don't have what you do. My kids will love it. Anyways, inside kids joke, I guess. Okay, so what you do is that you actually come in and have a certain amount of time to pay back what you owe. It's not revolving where you could pay a minimum payment for a long period of time. So like a net 55 account means I got 55 days to pay it back. Amazon's notorious for giving people net 55 accounts pretty early into the business credit building process. That means I can go buy stuff from Amazon and they give me nearly 2 months to actually pay that back. So most vendor credit are going to offer these kind of net terms, okay? Now, they're not going to need the cash flow credit or collateral in order to get approved. Some of these include, well, let's take a look. We could take a look at some starter vendors here in our business finance suite. This is the technology our clients use to build business credit. And you can see here Murphy USA, Uline, Phillips 76, even WEX Fleet Card offers a great one too. But WEX Fleet typically is going to want you to have a $500 deposit and a personal guarantee if you start with them. So you can start with WEX, you can start with Uline, Business T-Shirt Club, Supply Works from Home Depot. These are starter vendors. They won't ask you for a social security number. Oh, I told you earlier, Granger's another one. Granger will give you a $2,500 credit line just because you have a business license. These vendors are not going to ask for credit checks. They're not going to even ask for your social, but they are going to rely on that fundability. We can see here with WEX, the same stuff we talked about: DUNS number, business address, matches everywhere, EIN, entity in good standing, license, bank account, phone number with 411. And then we get into the fact of you're going to have to provide a guarantee or a deposit if you're starting with them. So again, you can see this is how our clients build business credit so quickly, is that we literally list every credit source they should apply for in what order, the underwriting guidelines, the quick link to apply, what kind of terms they offer. It's just step by step by step, and it saves you like literally 2.5 years. But if you're doing this on your own, this is kind of where you get hung up. You don't know which ones to apply for in which order. It's trial and error. But again, you get an idea that once you improve your fundability here, then you're able to come in and start actually getting approved for these kind of vendor accounts. Now, the next step is retail credit. And let me provide you one alternative here. There is another program called Credit Line Hybrid that you can also qualify for. And with Credit Line Hybrid, you can actually come in. Let me go into financing because our finance suite deals with business credit and financing. So with Credit Line Hybrid, you can actually come in and get credit lines with 0% interest rates for 6 to 18 months. Okay. And you can get approved for up to 150 grand, take the cash out of these credit lines at 0%. And a lot of them report to the business credit reporting agencies. So you're able to build business credit while getting real usable credit lines. And you get high limit credit lines, 10,000, 15, 20,000. So these first accounts you put on your business credit reports are high limit credit lines. Sounds really good. Here's the catch, drawback. You need good credit to get it. A lot of people might not have good credit, especially us entrepreneurs. We're risk takers, so our credit usually reflects that, right? So when it comes to Credit Line Hybrid, great way to go. If you have a 680 FICO score or someone around you, family member, friend, investor, can be a guarantor, we can use their credit to get it. Great way to go, because the credit lines you get, whether they sign for them or you, are reported to the business credit reporting agencies and then help you build business credit. So a really good way to go where you're able to come in and build business credit initially without vendors. But again, you need good personal credit to get it. As we've already talked about, they don't pull your personal credit with vendors. So I've given you 2 ways to build the initial business credit. One with a personal guarantee and credit check. But you get high limit credit lines, Credit Line Hybrid. The second is using vendors or initial starter vendors. And these initial starter vendors don't look at personal guarantees. They don't require personal credit checks in order to actually get approved. Ahmad says, do I need a business license for an LLC? Look, business licenses aren't required based on your entity type. They're required based on your industry, your city, your state, or your county. So you have to do research whether your city, your state, your county, or your industry require a license. But what I'm suggesting is that it doesn't matter if it's required or not. If you can get one, get it. It's super cheap in Florida, in my county, to get a license. And if I can, I'm going to get it because it gives me credibility. But those are the things to research to actually see if that can. Now, Michael says, great info going through this now. I appreciate it. Thanks for tuning in from LinkedIn. That means a lot. And Mike says, what recourse does a business have if someone does not personal guarantee other than putting it on the credit profile? Just trying to see what benefit would be to the business giving you the credit without a personal guarantee. Okay, so think of it like this. So here's what a personal guarantee means. A personal guarantee means that if I sign as a guarantor and give a PG, personal guarantee, it means that debtor, if I default, can come after my business assets and my personal assets. They can come after me. But if I don't give a personal guarantee, they can only come after my business assets. So a company would give somebody or would waive a personal guarantee requirement because the business can stand on its own. So let's use Dell as an example. Michael Dell doesn't have to sign as a guarantee or guarantor when Dell gets a credit line for $100 million, because Dell has enough credit to stand on its own where it doesn't need its owner to vouch for the company. And if you look at personal guarantees, this is exactly how they're described. They're needed when the business can't stand on its own. Once the business stands on its own, the personal guarantor isn't needed. So to answer your question, Michael, the recourse somebody has when there is no guarantee is to come after the assets of the business, not the personal assets. The reason a credit card issuer would want to do that is because a business have established enough credit profile that it can stand on its own. It looks like it has enough value without the actual business owner being needed. So that's exactly how that system works. Hopefully that answers your question. Okay, so the next step is retail credit. Almost every retailer offers this kind of business credit. Staples, Office Depot, Lowe's, Amazon, Walmart. I mean, you name a retailer, they are offering business credit without a personal guarantee, without a personal credit check. So for example, Nordstrom and Macy's even offer credit without a personal guarantee and without a personal credit check. So here, let's just take a tour so you can see the kind of credit that's available. So we can see here everything from Get-Go, places you might not know, like the Gulf Fleet, to Zorro, to Luke Oil, to Meijer Grocery Store, to Office Depot, which we're all familiar with, right? United Rentals, okay, Home Depot. So you get the idea here. Almost every major retailer offers this kind of business credit without a personal guarantee and without a personal credit check. Now, Crown Office Supplies, okay, Sunoco, Gimpler's here, Speedway. These are all fleet cards. We'll talk about them in a minute. Okay, Tractor Supply, AT&T, so we can get phones here. Okay, Spanx. I mean, it's just almost endless. I could sit here and show you hundreds and hundreds and hundreds and hundreds and hundreds of retailers, but I think you get the idea. I mean, the bottom line is that almost every major kind of retailer you can think about that's a retail store offers this kind of business credit. Here's Sam's Club, for example. Here's Dell, for example. So again, almost all of these offer business credit. But I want to show you something very important. When you get 5 accounts on your initial business credit reports using vendors or credit line hybrid, we talked about those steps, fundability, then we get initial vendor credit from initial vendors or from credit line hybrid. Then we move to retailers. But here's what's important. When you have 5 accounts, you can start to get approved for retail credit. What do I mean by start? You see how we tier this out for our clients? Tier 1, Tier 2, Tier 3, Tier 4. What this means is it means that if you want to come in and get approved for, let's say, Meijer Grocery Store, okay, then you need 6 accounts on your business credit reports. But if you wanted to come in and get approved not for Meijer, but you want to get approved instead of Meijer, you want to get approved for Sam's Club, well, then you need to actually have 14 accounts. So when I say this, when you have 5 accounts, you can start to get approved for retail credit. As you've seen, some retailers won't approve you unless you have 6 accounts on your business credit reports. Some will require 14 accounts on your business credit reports. Some will require 10 accounts on your business credit reports. As you can see here, these require 10. So when you have 5 accounts, you can start to get approved for retailers. We just simplify it for our clients by saying these require 5, these require 10, these require 14. So you only apply for the ones you can get approved with. If you're not working with Credit Suite, that's okay. Just know it's trial and error. You're not going to know Sam's Club has 14 account requirement until you apply for them when you have 5 and get denied, and then try again at 8 and get denied, and then have 14 and get approved. That's the only way you know. If it's not tiered out for you. And we don't make all this publicly accessible because it changes. Literally, it changes daily. We have a data team that all they do every day, that is their entire job, is to call every one of these underwriting sources to make sure that the information that we provide is valid. It's how we know when things change so quickly. We manually do it. There is no automated way to do this thing. We have an entire team that manually dials the phone, and that's how we get it. So it's just a trial and error process. So when you get to 14 accounts or 5 accounts, you can start to get to retail credit. But again, it's going to require 10, 12, 14, 8 to get some other kind of account. So it's also important to note that they may advertise time in business and annual sales requirements. So let me give you examples here. If you go to Staples or Office Depot, they will tell you in order to get approved without a personal guarantee, you need 1 million in sales or 3 years time in business. But what we found is that none of that matters. If you have enough trade lines to qualify, they will give you an approval. If I go to Sam's Club and I have 14 accounts on my business credit boards, it doesn't matter if I've been open 6 months and have 100,000 in sales. They're going to approve me because I have enough accounts on my credit reports to get approved. So don't be deterred based on revenue requirements and time and business requirements. I assure you that you can overcome those. We've helped nearly 50,000 people through this process as long as you have enough accounts reporting on the business credit report. So here's where I ask again. If you're getting value, hit the like button, hit the love button, hit the share button. That helps me show this to more people because the social channels will invite more people in. So if you're getting value, hit the like button. If you're really getting value, then even subscribe so you'll be able to get more information as well in the future from us. Edward says, hey, Ty, I made the mistake of using a P.O. box prior to getting educated by you guys. So how easy is it to get everything changed with the IRS? It's easy. No, it's not. It's not easy. The reality with the IRS is easy. The reality with everybody else isn't. So if you're going to get an address, you got to fix the underlying problem. Go get a virtual address or a real retail location. Once you have that new address, then what you want to do, Edward, is you want to make sure that you update that everywhere you can. Think about offline listings. Your entity, your Secretary of State, you want to go to their online, you want to do your IRS stuff, your bank account statements, your utility statements, all that stuff. Then think about online, your website, your social media channels, your Google listing, your Bing listing, your Yahoo listing, etc. I'd also use a service like Yext, Y-E-X-T, where you can change it one place and update it everywhere online, okay? That's a big deal. That can help you as well. If you use a service like Yext, you update all the sources you know of online and offline. That's going to help. Updating it with the IRS is actually fairly easy. It's just one form that you actually have to use and update with them. Great to hear. If you literally, I my own LinkedIn and am responding to people. I don't even know how it's possible. That's what happens in my world. I'm responding, and I just gave you the answer right here. Do I need over a 680 across all three? You should for credit line hybrid. The score doesn't matter. What matters is good credit. With credit line hybrid, you need to have like a 680 type credit profile. You need to have no derogatory items, no collections, no judgments, bankruptcies. You need to have open credit cards with low limits. You need to have, maybe an established mortgage or auto loan. If you have what I described, your credit scores would be above 680. If they're not, then whatever's causing them to be low is probably the problem that can get you approved credit line hybrid. Think of it like this. Credit line hybrid, you're going to get 50, 100, 150,000 based solely on the quality of your credit. So your credit has to be good in order to actually go through and be able to get that before. And Kiara says, I did the same by postal. He said before, it's easy to update everything though. Okay. Credit line hybrid possible 1 year, 7 months, credit card. It is. They want you to have 2 years of credit card history. But Mike, you're a partner with us. Just get in touch with our team and we can look at it without any inquiry on your credit report and tell you. We get you pre-approved same day. And there's no hard inquiry on your credit report to get you pre-approved. So we can check it out. But usually they want a credit card with at least 1-2 years worth of history or an auto or mortgage loan, but we can look at that individually for you. And Unity Enterprise says, I got approved for 7 starter vendor accounts. Experian has 2 profiles, but have business name, city, and state. 1 have the address and other than 4th suite. Okay, so this is what's happening. What's being described here by Unity Enterprise is that Experian has created 2 credit profiles for the business. And now you're even referencing addresses, which is the reason why. So let's talk about this to begin with. So we're talking about changing addresses. This is what happens. Your business credit profile is created because of your business name and your business address. That's what they're looking at. So if you change addresses, they'll oftentimes, if you don't update it with the credit bureau and tell them that, they'll create a second credit profile because I think there's 2 businesses. This is why if you ever change your address, you have to notify the credit bureaus you're doing it. Experian and Equifax, you can do it through their monitoring. Dun & Bradstreet has this program they call their dashboard that you can do it. So you've got to update those addresses or they'll create multiple credit profiles. Now, the great news for you is, Unity, all you have to do is notify Experian that it's one business and they will combine those to one credit profile for you, just so you know that. And A Victor says, what requirements are needed for using a funding partner? Do they have to be listed? No, there is none. There's no requirements. If you have a credit line, if you have somebody that can work for credit line hybrid, give us a call. Here's our number, 877-600-2487. Anything that needs to be done, the actual funding source can help you do. You don't need to do anything first. And Marcus says, what about aged corps? Are they worthwhile with gaining fundability? They're not. They're crap. They're absolute crap, and it's a waste of time and money. And let me explain to you why, Marcus, because if you buy an aged corporation with the idea that a company that's open longer will help you, here's what happens. When you go to buy this, then they have to transfer the ownership to you. When that ownership changes, a red flag goes up on the credit bureau, and the credit bureau even says, hey, ownership change as of this date. At that point, the credit bureaus do what they call re-aging your credit profile. They re-age the credit profile as if the business just was created on the date ownership changed. Lenders and credit issuers are going to want to know when you open your bank account, they're going to start looking at the bank account open date instead of the business start date. What I'm telling you is that it is 100% waste of money. If you buy an aged corp, the credit bureaus and creditors already know They already know what's happening, so they automatically will now default to the new date you took ownership and you just wasted your money. It's why you want to stay away from H Corps. They're just simply an absolute waste of money, and you don't need them. I'm showing you the steps to build business credit without spending thousands of dollars on trade lines or H Corps. Just follow these steps, and you're able to be successful. So when you have 8 accounts, you can start to get fleet credit cards, fuel, repair, maintenance, vehicles, stuff like that. We looked at a bunch of these things along the way. We looked at Sunoco. It's a fleet account. We looked at Speedway, Sinclair Gas, BP, Shell. These are all fleet accounts here as well. So there's a lot of here. Stripes, Fleet, Citgo. Okay, these are all fleet accounts. Repair, maintenance of vehicles, fuel of vehicles. If you don't have a fleet, I don't have a fleet card. Corporate credit, I've never got a fleet card because I don't have a fleet of vehicles. Like I work from home. I don't even drive a vehicle for business purposes. But if you do have a vehicle or a fleet, this is the kind of credit that you're going to be able to get. And in order to get approved without a personal guarantee deposit, you should have 8 accounts reporting on your business credit reports. Then we get to bank credit cards. These are Visa. These are MasterCards. And these are the ones that you need to have 14 accounts on your business credit reports in order to get. And there's a lot of this kind of credit that's out there that you're able to start coming in and accessing. A lot of different banks offer this. So you can get Visa card credit. You can get MasterCard credit with 14 accounts in your business credit reports. You can also start to get auto financing, Ally, GM, Ford, Toyota. So let me give you an example. Our client, Christine, got $185,000 approved at Ford without a personal guarantee and credit check. That's what's possible with 14 accounts on your business credit reports. Now, you can also get computer leases. You can get Dell, you can get Apple, you can get HP at this point as well. So this 14 credit tier 14 trade line or payment experience tier gets you access to pretty much everything. The Visa cards, the MasterCards, it gets you access to auto financing, it gets you access to computer leases, it gets you access to all that stuff. Now, to give you some tips along the way, okay, first of all, here's about 3, 4, 5 of my most important tips to be able to do this quickly. Okay, number 1 tip, work with us. No, I'm just kidding. It does help you though. Like with all the data that we give you in our system and you are building business credit this way, you know how easy it is for our clients to navigate the system. They have business advisors that hold their hand and help them through this entire process. And they literally go step by step by step and only apply for credit they know they're going to get. So that's my advice. If you want to expedite, you should know the order of credit to apply where you will get approved. It's what's going to save you a lot of time. Secondly, use the credit you actually get. Okay, use it at least once in a year because once in a year is where it will show on your credit report as being used, and less than that, it won't. I recommend any credit you get, you try to use once every 6 months to keep it fresh. How much should you spend with each vendor? It varies. Some like Uline and Quill want you to spend $50 or $100. If you have those questions and you're not working with Credit Suite where all that data is there, then you want to call them and ask them. Ask them those questions. And keep in mind, whenever you call a credit issuer, it's better to talk to an underwriter. They know the details the front-end people typically don't. And how I get from front-end person to underwriters, I ask them. And then they tell me no. And then they say, I'll help you. And I say, okay, here's my question. And I ask them very complicated questions that only underwriters would know. And they say, hold on a minute. And they get me an underwriter. Okay, I'm just telling you, I do this all the time. I will just start asking them extremely complex questions, easier for me because I know credit really well. And then I'm like, or you could just connect me with an underwriter. And they can answer these questions if you don't know all the answers, or I'll wait for you to give me answers to every one of those questions. And they find it's just easier to connect to an underwriter. Banks now are required per June 2018 in the government to verify your identity. So these credit issuers are going to ask for your social security number to verify your identity, but you need to make sure you're not authorizing a personal guarantee or credit check, or they'll pull your personal credit and actually and make the approval based on personal credit. So some tips there. And apply for credit you're actually going to use. I see so many people trying to skip to Visa card and MasterCard level, and it's kind of astonishing to me. I don't know why. Because most stuff you need to buy to fund a business, you can get at Walmart and Amazon. Let's be honest, you can. So don't rush through to get to the next tier. Get credit in every tier that you really need to use to grow your business. I'm not going to go start with a Granger account building business credit because I don't need outdoor stuff. But I do ship stuff and I need Uline. So I'm going to get vendors I'm actually going to get approved with. When I get to retail credit, I'm not going to go to Macy's and get approved. You know why? I don't shop at Macy's. What I do is I shop at Amazon. And therefore, I'm going to get an Amazon credit card because I know I'm going to use an Amazon credit card. I'm going to get a Walmart credit card because I know I'm going to use Walmart. I'm going to get Staples and Office Depot. I'm going to get the credit cards I'm actually going to use and make sure that you use those. Those are some tips that will help you along the way. Okay, building business credit opens up a lot of funding opportunities. If you are working with us, our advisor team helps you through all of this process. If not, just remember you have to follow this very set sequence of steps. If you want some help along the way for free, give us a call. 877-600-2487. Three things happen on a call with us. First, we do a fundability check. We'll do a fundability assessment to see what's wrong with your fundability and what needs to be fixed. We get your business credit reports with Dun & Bradstreet, Equifax, Experian for free and do a review of those with you, giving you tips and tactics to shortcut the process. And third thing is we do a funding qualification. We tell you all the money you can qualify for right now. There's three ways you can get the consultation. Give us a call or email us, 877-600-2487, info@creditsuite.com, or schedule online at creditsuite.com/consult. I've got a free guide here that will map out the steps of building business credit as well. It's at creditsuite.com/EIN. And if you got value, please hit the like button, please hit the love button, or share. Please do that because that helps us get more people in this information. It helps them actually get the money they need to grow their business as well. And as entrepreneurs, we should work together to help each other. I believe that at least. Okay, so please like and make sure you subscribe as well. By subscribing, you'll then be notified whenever we go live and you'll be able to get our information. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday. Even when I'm not here, I'll be out of country Tuesday next week, so somebody else will come in my place, but you will still always get the valuable content from us. Top right of our page, creditsuite.com, you can access our social channels, daily tips on Twitter, on Instagram, and Facebook, hundreds of videos on YouTube, a podcast called The Business Credit and Financing Show. Gino Wickman, I talked to him today. He's coming on the podcast. He wrote the book Traction. He wrote the book Entrepreneurial Leap. So very popular author. So these are the kind of people we have on, and they teach all aspects you need to know to start and grow a business. So we have all that kind of training as well. And you can access our podcast, all of our social channels at the top right of our page, creditsuite.com. Okay, so let me make sure. A Victor says, what requirements are needed for using a funding partner? Do they have to list? We already talked about that. Age Corps, we talked about that. Jamie, thanks for loving the information. Kwame says, for the 14 accounts, is it a combination? Yes, it's a combination of all credit bureaus and all tiers. So 14 accounts total. If I look at DNB, Equifax, Experian, if I looked at all my 3 accounts, credit reports, and I add up how many accounts are reported, even if the same account reports to each bureau, then I want 14 total. It doesn't matter the tier. I need 14 total. Engineer Appliance Repair says, love, amazing Net 30 program. Does it report to the business credit reporting? It does. Amazon's. Yes, Amazon does report to the business credit reporting agency. It's a great account to get. And David says, do you have an affiliate program? We do. We have 2 programs. We have an affiliate program. You can go to creditsuite.com, and at the bottom of our page, you can click our affiliate link to enroll for free. We also have a partner program where our partners sell our business finance suite, the technology you see here, for about $3,000. And then their wholesale rate is $500 to $700. So if you're doing the math, they're making about $2,200 to $2,500 in profit for every sale. So if you know entrepreneurs, you might be interested in getting in on our partner program. You can literally make, and how much you make depends on how much you charge, but you can make thousands of dollars on that as well. Give us a call. We'll talk to you more about our partner program and our affiliate program. I've already showed you how to access that. And Jay Sweet says, I built business credit using your content. Thank you very much. Thank you for saying that, and a testimonial. I appreciate it. And thank you just for taking action. Because getting this information is one thing, but actually taking action, doing something with it is something else. So congratulations, Jay, for your success. So I'm going to wrap up. Thanks for tuning in. I look forward to seeing you on our next training next week, where we talk about more cool ways to get money to grow your business. Take care. Have a great day.